Good morning. So, investors underestimate how unprecedented revenue destruction is caused by coronavirus is going to damage even the biggest, highly rated companies. This could culminate in a full-on credit and liquidity crisis. So, despite all of this recent turmoil, markets are still complacent over the effects of a viral outbreak. While this is a public health crisis first, there's a real and looming potential for this crisis to spill over into a full-on credit and liquidity crisis. There's a growing risk that the COVID-19 crisis may lead to more systemic events that could catalyze a widespread downward spiral. Financial markets have been sent to a tailspin by fears that the global economy is on the brink of a deep recession. We've got entire countries and industries brought to a virtual standstill in an effort to contain the virus. The effects on corporate debt markets have been swift and extreme. U.S. junk bonds have lost nearly 19% this month, a deeper dive than even at the peak of the financial crisis back in 2008. Even investment-grade U.S. corporate bonds have lost more than 100%, as investors fret that the coming recession will hurt even more creditworthy companies. So while investors typically stress test their portfolios for scenarios where revenues might drop 20 to 40%, no one has ever contemplated the 50 to 100% declines that we're now seeing for some companies. Even if they only last for a short period of time, the effects of this earnings evaporation on a company's capital structure and liquidity are significant and will in turn have consequences for the broader ecosystem in that which a company operates. This crisis could be eased by containment measures, an eventual vaccine, and strong fiscal responses. However, there are several vulnerabilities like the rise in corporate indebtedness, the extent to which credit markets are dominated by investment funds that are vulnerable to daily outflows, deteriorated liquidity, and very irresponsible credit discipline. A wide group of the credit markets is underappreciating the revenue destruction taking place, and there are ripple effects that this is going to cause for even some of the world's strongest companies and assets. It's going to challenge the credit profiles and liquidity positions of a significant number of companies with high-quality business models, not to mention those companies that have weaker positions.